Hi, YouTube. Hello and welcome to the Piper Report. I read comments a lot, and I see that people really don't understand the budget process, and they really don't understand a few main concepts. Number one, the Federal Reserve, and number two, the main one, how it is impossible for the U.S. to pay back its national debt. We cannot, U.S., pay back our national debt until we change the banking systems. This is a fact. So even if Bill Clinton's prosperity, his economic prosperity continued on, the economy would collapse before we could have paid off our debt. I'm going to go over why here. Really, I should do a whole playlist regarding the Federal Reserve because there is so much information and I could maybe do like 50 different episodes. But I want to do a quick overview and I want to explain why all our money that we have in existence is money made from debt. I'm going to explain what that means and why it is impossible to pay off our money and why the Federal Reserve is evil and why fractional reserve lending is the worst kind of banking institution, the worst kind of banking system ever. And until we end fractional reserve lending, we will always be in perpetual debt. So anyways, Congress passes a budget. So they need money for that budget. So they create bonds. So what the Federal Reserve does, the Federal Reserve writes Congress a check for those bonds. Now, the check they give them isn't backed by anything. They give them a check, but what they're doing, they're creating that money out of thin air. They're essentially saying, here what, we're making money for you. That's called fiat money. So they give Congress fiat money. Now, here's where it gets interesting. For every dollar for every dollar of bonds the Federal Reserve gives to Congress, they get to make an additional $9 of bonds that they give to commercial banks to give out loans to businesses and individuals. That is key here. They call those bonds reserves, and that is the basis for them to create $9 additional for every dollar of bonds they buy from the U.S. government. That's key, remember that. So the money created for the bonds is spent by the government. But now that excess money, those $9 additional are given to commercial banks. And what the banks can do with that then, they can do what's called fractional reserve lending. Here's what it is. We'll make it simple. Let's say a commercial bank borrows $1 million from the Federal Reserve. The Federal Reserve only mandates that that bank has to keep 10% of that $1 million in their reserves. So that means they got to keep $100,000 in their bank. The other $900,000 they can loan out. So they get $1 million loan, and maybe they keep $100,000 and then they loan out the additional $900,000. Well, they do that, but then they add interest to it. So right there alone, with the interest added, that $1 million has now increased to something above $1 million. So they have artificially created more money just by using fractional reserve lending. And that's the whole point of fractional reserve lending. They only need a certain amount of reserves inside their bank. The rest they can loan out with interest. And artificially then, they create more money into the economy. And that is what's called making money through debt. And that is why it is literally impossible to pay off our national debt. Because all of the money circulating into the U.S. economy right now is all the debt that we have. So the more debt you pay off, eventually you are contracting that money back. And eventually there will be no money in the economy. No money in the economy collapses. So we cannot pay off our national debt because the economy will collapse. We can never get that far. So that is really a key point here. So until we actually end fractional reserve lending, until we either go back to the gold standard where we can base off our money on some kind of value, some type of intrinsic value, or what Bill still recommends, which I kind of like it as well, the government prints debt-free money. Now what does that mean? That means that the government has the power to coin money. The government is in the Constitution. So instead of selling bonds to the Federal Reserve and gets charged interest, and the Federal Reserve creates excess reserve funds, 9-to-1 ratio, gives those commercial banks, which commercial banks only need a whole lot of 10% and loan out the rest, we, the government, can actually create our own money with no interest. So then all of the programs implemented in the budget can be paid from Congress with debt-free money. Now, the problem with this, because this happened actually in colonial times, is that governments got trigger happy. They did way too much, and inflation actually kind of destroyed the economies in the colonial days. But But if you can control the inflation, have like a fixed stipulation of how much inflation you can do, or what I suggest even, make it where you can only spend 1% more than your total revenue. That's just one of my ideas. But anyways, what they could do now, they do it like there. They print off debt-free money, and then they slowly institute guidelines where banks eventually have to have 100% reserves. That means they can only lend out what they have in the bank. Right now, that's not the case. If, say there's a bank, a U.S. bank right now, let's say everyone at U.S. Bank wanted to go get their money out at once. The bank wouldn't be able to do it. They would go what's called on a end run. And the bank would actually have to get subsidized. They have to get bailed out, essentially. But that is key there. So the U.S. government could print its own money, debt-free money, and over time slowly mandate where banks have to have 100% reserves at all times. What this will do, this will stop the ever-increasing interest on our debt, and this would allow the U.S. to pay off its national debt and not collapse the economy in the process. Now that is just a broad overview of how the budget process works and how we are getting screwed by commercial banks and primarily by the Federal Reserve, which is the biggest nefarious private organization to exist, and we have to end the Fed. We have to end the Fed above all others, but fractional reserve lending is the catalyst for artificial money. It is not the catalyst, actually. It is the precursor. It is the essential tool used to artificially create money. And it's not even fiat money. It's artificially created because the interest creates more money without printing more money. That is a big one here. Fractional reserve lending needs to go. The Federal Reserve needs to go. And like I said, I really should do just a whole playlist of this because there are Cleveland police search for suspect who claimed to have committed murder on Facebook Live. Interesting. It's breaking news. Anyways, sorry about that. Yeah, fractional reserve lending. I forgot I was going to say before that, so I'll just say I'm done.